Hey, what's going on? Welcome back to the channel. In this video, we're going to be taking a look at Egld. I do want to say that I'm not a financial advisor. You should do your own research before investing money into crypto. If you haven't seen the previous update, make sure to watch that before watching this one. It's going to be linked in the top right hand corner of the screen. Now let's jump straight into the TA. Zooming out on the daily chart, you can see we have a massive Fibonacci retracement set up from the swing high in November 2021 down to the swing low in June 2021. We retraced all the way down to our minimal target, which was $28.50. We were talking about this for months and we finally retraced back down here. I told you guys this could be happening. If we see a retracement, $28.50 is going to be your massive target. And we look at this perfect bounce off of that level. From there, we were already up 28.7%. Now, I don't think this looks bullish. Because what you did essentially here is you lost this support block that you had since March. You lost this support block, you lost this December 2022 low, and now you've come up and you're retesting this block as resistance. This does not look good if you were trying to enter and take profit somewhere at $50, $60, $70. So I would say the next month we still could potentially have a strong dip to the downside, and maybe by August, September we have that bull trap, we have another move to the upside. As of right now, you can see that we're printing lower lows, lower highs. This resistance level is pushing us down. So I can't really say that we're going to be having a massive move to the upside anytime soon. We do have Bitcoin pumping. Yeah, that is pumping, but the altcoins aren't doing as well because we are losing massive support levels. Bitcoin, on the contrary, is breaking above resistance and holding previous resistance levels as support. So this was a very good entry. After that, what we could be expecting, let's actually add another Fib retracement here. So from that high that we printed back in February, we're going to add that, and we're going to have the December 2022 low for the Fib, and we have our 1.618 target at $24.25. If we end up losing that low, which we already did, and this was also our 1.272 actually, you can see both of the 1.272s are actually on the same price, which is interesting. But the 1.618 here would be our target short term if we were actually to continue in this downtrend. Right now we're breaking back above the first Fib level, which is $32.70. I do think we're going to be seeing another move to the downside, at least back to $28.50. Taking a look at the daily RSI, as you can see, we dipped into our blue support block perfectly. A perfect bounce, perfect retest. So between 25.2 down to 20.5 on the index. This is our massive support block that we have been retesting since October 2020. And with every retest, we have a massive move to the upside. And lo and behold, we have the exact same thing play out this time around. So if you entered here, congratulations. Full transparency, I do own Egld, and I'm staking through the Ledger Live app. And I'm not going to be selling anytime soon. I'm not swing trading either. I'm just going to be holding until the next bull market. And if we dip to $24, I'm probably going to add 30% or up my position by 30% because these prices are going to be very cheap. If we actually do get down to 24 bucks, that's going to be really low. Now, the daily RSI right now is sort of running into this resistance level that we've been running into since January this year. So pretty much since the start of the year, we've had this block above us that kept us down, that keeps on rejecting us. And right now we're trying to break above it, but I don't think we're going to succeed. I think this is going to be a fake out, and we're going to come back down to the golden support block. Now, this golden support block obviously did serve us as support quite a few times, but this is not as important of a level as the level down below here, the blue support block. If you're looking for a short-term entry and you're looking to make 10 to 15%, you could wait for us to retrace back down into the golden block, and from there you can enter and wait for a slight retracement, and you can take profits quickly if that's what you want to be doing. Now, the golden support block is set between 37.6 on the index down to 35. Let's switch over to the weekly chart. And before we continue with the video, I quickly want to mention my Patreon that's linked down below in the description. If you enjoy my content, you want to get more exclusive content, and you want to support me at the same time, definitely feel free to check out the Patreon, because you're going to get a 7-day free access on my Patreon and an instant access to all of my content since October 2021, which is when I started. You'll get access to content like exclusive weekly podcasts, and we're starting to invite guests already. We have 40 plus low cap gem posts. We have a bunch of project reviews. We have a bunch of resources that are going to help you save time and make more money with this upcoming bull market. So this is definitely a great exchange of value for the both of us. And once again, there's a 7-day free trial. Feel free to check it out. You can leave anytime, and let's continue with the video. Now, switching over to the weekly chart, we do have the same Fibonacci retracement with our 1.618 target at $24.50. You can see that we have a support level that we've been adhering to since June last year. We could be seeing a retest of that level once again sometime this summer. And that could mean that we're going to be retracing down to the 1.618 level, which is below $25. So roughly $25 to $24.50. That could be our bottom. Obviously, I don't know what's going to be happening. I'm just giving you the possible scenarios. Now, if we continue pumping here and we run into a major resistance level, if we manage, that is, to break above the 20 EMA, you have the golden pocket here, or the 0.618 and the 0.5 fib levels between $41 and $39. And you have this massive descending resistance trend line that we've been running into since August last year. So if you, for whatever reason, break above the 20 EMA, you have two major resistance levels above you waiting, or above the 20 EMA waiting to reject you back down. So if you were looking to take some profits short term, or you're looking to exit, I would say $41 to $39 is going to be your resistance level that's going to send us back down. And if we open up the weekly RSI, you can see that we are quite low. Let's actually compare and see if we have any sort of divergences playing out. And we do have a bullish divergence playing out. Now, if I take we don't have that arrow indicator. Okay, no problem. So you can see that here we're printing a lower lows, as you can see. If I take a trend line and drag it down, it's going to be a lower low. Now, on the RSI, you're doing the exact opposite. You're printing a higher low. And this is called a bullish divergence. When the price action is printing a lower low and the RSI is doing the opposite, this is a bullish divergence. So this could end up sending us into this resistance level that we just discussed. So maybe this already played out. Maybe this short-term uptrend already played out, and this was the aftermath from this bullish divergence. Maybe not. The stochastic is sort of still coiling up, and we're not really seeing anything. We're just consolidating below in the oversold. As of right now, this is a good entry based on that indicator, and based on the price action. If you were buying, like, forget all the indicators. If you were buying up here at $60, $100, $120, $200, then forget about all the indicators. You just have to be buying as much as you can to average down your position, because this wasn't smart. Buying up here, this was not smart. Buying here is extremely smart, because not only have you pulled back since the bull market high 95%, you're going to be dragging down your average buying price. And the more you buy, the lower the average buying price is going to be. So don't feel depressed because you bought in at these all-time high prices. This was your experience. This was your lesson. But now is the time to fix those mistakes. So yeah, that's pretty much everything I have for Egld. Like I said, I'm going to be holding this token for the next few years until we get to the bull market. Now, let's say we bottom out at $24.50, and let's see what our potential targets to the upside are going to be looking like. Let me get that. And okay, 24.5, and we drag it all the way up to our first fib level here. So we are assuming that $24.50 is going to be our all-time low, or the local low for this bear market. Then we're going to be looking at $920 as our target. in the bull market. So that would be the 1.272 fib, and you're going to ask why not the 1.618, because here you have to apply logic. If we get to the 1.272 from $24.50, that's 3,600% to the upside. If we drag the ruler all the way up to the 1.618, that's 10,000% to the upside. So I don't think Elrond is going to be doing 10,000% in the next bull market. That is why we can target the minimal target here, which is the 1.272. That is pretty much going to cover everything. Let me know if I missed something that I should have mentioned in the video. I'm going to see you in the next update. Take care and goodbye.